The VWAP, the volume weighted average price indicator, the most misused indicator that all retail day traders use. Today, I'm going to be showing you exactly how to use it. Not only am I going to be going over the daily chart, specific daily chart setups that it needs to be used, and then in combination with the look of the intraday chart, the 1 minute, the 2 minute, the 3 minute, the 5 minute, whatever time frame you use, this will work. So if you follow the directions, you follow the setup that I'm going to be showing you, these are the only times, and we're going to discuss this more as we go, the only times to use the VWAP. So give me a sec. I'm going to pull up my charts and we are going to rock and roll, ladies and gentlemen. Okay, so obviously I have my screens up. Before we get into this, I want to remind people that about 50% of you do not and are not subscribed to my channel, although you are watching. That's all I ask. This is free content, free actionable content that you can actually use in your day trading for free. This type of information isn't out there for free. So please, all I ask is that you please hit the like button and subscribe. And if you don't, well, that's kind of lame. So how about we do that? It's nothing's free in life, and that's a small payment. So on that note, please subscribe, please like, and if you have any questions whatsoever, answer below in the comment section, and I will be sure to answer. So let's rock and roll. The VWAP, volume weighted average price. Where did it start? Well, it started off as an institutional indicator developed by mutual funds at the beginning. And this is why a lot of retail traders have flocked to it. When you have a specific indicator that we know that institutional traders use to go long or go short, basically buy or sell, it's important, right? So to take it back to the beginning, everything that the institutional traders will use obviously has a purpose. So like I just said, when retail traders understand that and know that, they're going to be all over it. However, many years have now transpired, and institutional traders are not using the VWAP like they used to. So what's the whole idea, and what is the VWAP? Well, like the name suggests, the volume weighted average price. What that is I'll go to the charts and show you. At any given moment, let's say right here, okay, on the 13th, right here at 11:21 a.m., the average price is $561.18 per share. That is the average price by volume. So what that essentially translates into is best price. That's why it's important. It gives you an idea of best price. What is the absolute best price for that time of day that I can purchase the stock? So if you're buying way up here, is that a good idea where it's over 1.5 points away from best price? Best price. No, that's why the VWAP is important. Okay, this is how it's traditionally used. Okay, in the most layman's type of terms, the most basic form. It is a way to get an average on the day, best price. So now that we know that, should we buy every single time that we touch the VWAP? No, because institutional traders are not using it that way anymore. It was used that way, where institutions, banks, hedge funds, whatever, they have an obligation to their clients to give them the best price. So let's say you go to the bank, right? And you want to buy X amount of shares of SPY or Apple or Amazon or Google. They have an obligation to give you the best price. And that is a way for them to basically prove they have given you the best price, or at least close to the best price, if you kind of catch my drift, right? So that's what's going on there. Now, like I said, not every day are institutions going to be using heavy buy volume at that VWAP. Okay, that's kind of a thing in the past. They will give you, the retail dumb money trader, the best price on the day. If you want to buy Apple on that day, they'll give you best price, which is VWAP. So how do institutions actually use the VWAP to buy for themselves? Because that's the important part. Wherever institutions are buying, that's where volume is going to come in heavy, right? That's when volume comes in, is when they are actually buying. Well, step one is to understand where we are on the daily chart. So let's take a look. So this blue chart on the left is the daily chart. Each one of these candles represents one full day of action. This is the most widely used chart in all of trading, and it's an important chart. This is where I do most of my technical analysis. And the chart on the right is the 1 minute chart. I use the 1 minute chart. Now, some people will say the 2 minute chart, the 3 minute, the 5 minute, the 15-minute chart is better. I don't give a shit. It does not matter. Okay. I use the 1 minute chart. I've been using it for over a decade successfully. This is what I use. So let's talk about the daily chart. Now, I'm going to ask you guys a really quick question. It's kind of one of those, falls into the category of a dumb question. Where is the best place to buy SPY? There's two spots on this given chart. The price point would be down in here, right? Down here and down here. And that's because it is at lows. Well, we don't know it's going to be bought up right at that specific price point, right? It's just because it's at lows. That would be best price. Now, I did a video on volume just the other day. Link will be up above in the little card up there. I highly suggest you watch that. It'll give you an idea of when we are bottoming and when we are topping. So now that you guys have paused this video and went back and watched that, or maybe you have already watched that, let's discuss the best time to buy. So best time to buy is going to be down at lows, down at lows, down at lows, a dip. Okay. So how do we use that with our VWAP? And kind of circle out the areas that would be best place to buy, right? If you're going to buy dips. Now, this obviously didn't work out. I'm just trying to paint for you the picture that we want to buy at lows. We don't want to be buying up at highs. It's very silly, right? It's a very dumb money thing to do. So in combination with when we are bottoming on the chart, okay, when we have sold off to, let's say, a moving average, or again, watch my volume lesson because that's going to tell you and give you an idea of exactly when to go long on these. But now that we know that we're at lows, now we need to go into the 1 minute chart. On those specific days when we are bottoming or still in and around the bottom, okay? When we are consolidating down at lows and volume is increasing, we know that this has an opportunity to come up. So if we know this, we know that these are areas, once it starts bottoming like this, that institutions become very interested for whatever reason. Maybe they know that there's data coming out, or this week we have a potential, even though they have already said that there will be a Fed rate cut, that will potentially bring in longs, institutions. Now, institutions are already in. It's only dumb money retail buying this right now, okay? So down here at lows is where we want to be paying attention again. So I don't mean to repeat myself, but it bears repeating. So now let's go into the 1 minute chart. And I'm going to have to draw something out for you because the setup that we have on the 1 minute chart is not a setup that I would buy the VWAP, obviously, because we're up at highs. Okay. So let me draw this out for you. We're going to use orange for the VWAP. So that is our VWAP. Now I'm going to give you a very specific look, and I want you guys to follow this look like I'm drawing it perfectly, okay? So if this is our action on the day, okay, let's say we open up, it comes down, finds a support level, and comes up. First of all, you should be buying that support level, but we're talking about the VWAP and how to buy the VWAP. So we come up, we're probably going to come down, pull back into natural support, which is the opening price, and then keep coming up. Now, I'm not necessarily looking to buy this VWAP tag. We're going to be looking later on, and I'll explain why in a minute. So as it comes down, holds that support, and really starts cruising, you're going to notice that it's not just squeeze, but there is definitive buying pressure coming in, okay? There's a lot of volume coming in on the day. Again, we are at lows on the daily chart. It's a perfect spot. We would be looking for more of a day two continuation on the daily chart. Okay, a day two continuation. Again, I have lots of videos on my YouTube channel for free that you can go watch that'll give you an idea of that. But what we're looking for right now, it's not a quick pullback into the VWAP. That's not what we're looking for. Okay, we don't want fast. If it's fast like that, that tells me that there's manipulation and a really hard sell. We don't want a hard sell. Okay, so what we want instead is a very gradual, controlled pullback. Okay, so when it pulls back, it's very gradual and it looks very clean. Okay, when you see that, what they are doing, what this represents on the intraday chart is institutions selling to get it back down into best price. Now, you may be asking, well, that doesn't make sense. Why would an institution sell like that in order to bring it down into the VWAP? Well, institutions, just like anyone that is smart with money, has no problems spending $1 to make $100. Do you understand? So if it costed them $1 million in order to draw this back into the VWAP to make $10 million on the sell, wouldn't you do that? Of course you would. And that's what's going on here. They're essentially selling using the volume because they have a volume advantage being institutions, that they can then sell it back into the VWAP because they will use some shares of theirs, right? So $1 million. Let's say these are arbitrary numbers. Please keep in mind $1 million when they have a bank of sells or buys that they need to do, right? So they'll sell $1 million to then get that volume of 10 million in buys for them. And then that's when it comes up and you will start noticing a really high angle to it. We're not going to get into that. That's beyond the scope of this lesson. But what I'm trying to paint for you guys on this, let me clean this up a little bit. What I'm trying to paint on this picture is a slow, gradual pullback into the VWAP. And once you see it come into the VWAP, you're going to notice a heavy volume spike. So that heavy volume spike, and it's not just a crazy spike, it's just heavy volume coming in. The closer it gets into VWAP, and it can even break the VWAP a little bit, it's in a designated area. So let's say they are buying and they also have clientele that are in the upper echelon of their clientele. They will start executing those buys for their upper echelon clientele out of ranking of 1 through 10, 10 being the lowest, number 1 being the best. This would be number 10's buy spot, number 9's buy spot, number 8's best price buy spot, and so on. So as it's coming down, they are waiting for that best price. They want the best price on the day. Remember, we're not talking that we are up at highs. Nobody's buying up here. Down here at lows on a day two continuation. Day two continuation basically means that it is confirmed that strength. Buying pressure is going to come in. You will see retail buying pressure come in as well as institutions. But institutions will generally buy for the first 3 days of that dip. Anything after that is a lot of retail and it's a lot of shorts getting squeezed. You got to remember that. So the best way to explain this is a nice extended push needs to be extended away from that VWAP and a slow, controlled, beautiful, clean pullback into that area. When you see that, that's the go signal. You know that they are setting it up for that buy here. Okay. So that's on the long. That's at lows. So how do we use the VWAP when we're up at highs? This is one of my absolute favorite setups here I'm about to show you guys. So when we are now up at highs, let's go into the daily chart. When we're up at highs and we're about to sell off, okay, on these big red days when those sells actually come in, you can actually check this for yourself to see if this is legit information or not. Go back and take a look. You'll see this exact setup. This one takes some time, okay? So we have we'll just use that as the VWAP. Now, here's our action on the day. Let's say this here is previous close or some support level, a major support level. And we happen to have gapped up. Well, we gap up, we open. If we push or dip, it doesn't matter. But let's say we push a little bit and then sell off. That VWAP is irrelevant at that first thing. It doesn't matter. That's not what we're looking at. Okay. So when we sell off into support, it's going to come back up. It'll test a natural level of support, which is, let's say, that dip in the morning, or maybe there's a pre-market level, and then it will reject. And once it breaks this major, remember, this is major support, that's when you're going to get the sell, and you're going to get speed, okay? And you're going to sell off really hard. There's a lot of people panicking here, okay? Now, usually they'll use sells like this, especially down in here at these dips. They'll use these to scoop up all of that buy volume. They basically create liquidity by breaking that support level. But because we're up at highs, we're most likely due for a sell, right? Makes sense. If you were long here on the daily or long here, you got it all the way back up into all-time highs, you would probably sell. You would at least pull profits. If you don't, you're an idiot, right? So that's what's going on here. As it's selling, it is going to sell hard, and it's going to sell for a while. We're not talking the first 5 minutes, 10 minutes, 15 minutes of the day. We're talking a good, steady hour, hour and a half long of selling. Very minimal pops back up and just selling. Okay, so I'm going to redraw this VWAP. It's not quite what I wanted, but we'll use the same area here. So let's say, because it's going to start following that price point, right? So let's say it's down somewhere at this angle. Now what we want to be looking for, and this is the important part, when we are chasing, let's say there is a moving average all the way down, it just keeps coming up and it keeps ticking that 9 EMA, 9 EMA, 9 EMA, 9 EMA. What that represents is the 9 EMA sell algorithm that is going on right then and there. So once the action starts coming up, once we get into that, and again, it's going to be very extended, and it's kind of like a slow, same on the long, a slow, gradual climb back up into the VWAP. And to be honest, I got to change the look of this yet again. Give me 2 seconds. There we go. That's a lot better. As we come into that, and you see how extended and how much gap is in between here. Now, this is a very specific look type of setup. Now, again, this is 11 years in the stock market trading of experience. So some of you may be watching, it's like, what the hell is this guy talking about? The look of the chart. This is one of those things. Just listen. And if you listen, you're going to make a lot of money with this. So that gradual, slow climb back up, as soon as it comes into the VWAP, this is when it'll start selling off again. This is where it creates a different setup that I have. And it's actually at tricktrades.com under the charts section. So this becomes support. It's going to break, pop, and continue to sell. And you're going to have a hard sell after that. This is what we call a slam play. It is a long-term, over the course of a day play. This is how a slam play sets up. It will retrace back into the VWAP to hit that sell. Remember, institutions have an obligation to give you best price. And if you have a bunch of big wig clients that are absolutely freaking out, or they need to get out as well, and it's not too much of a panic, it's just the start of a sell because we're up at highs, this is where they will sell. They will always sell at best price. Institutional traders are very patient, so they can use shorts, paying themselves, as well as them using some of their own money to drive it back up into best price to get that best price, the actual best price of the VWAP on the day. That creates this look. this look right here, and then after the fact, it'll look like this. It has a slam play, and I call it a slam play because after it tests here, it is lights out. So even if you miss that VWAP, you do have another opportunity, although it seems like it's very extended on the day. That's where this will sell off. And I'm not talking about a little red day. This is when you get these massive red days. And if you don't short that resistance because you were looking for the long, I would be shorting resistance, but that's fine. If you miss it, you got to wait later on. And this isn't going to happen until probably around noon or just after lunchtime. That's when this will happen. So that is the short side of things. Now I want to take one more minute or a few minutes here and discuss the look of the candles, okay? Because this is really important as well. Now, when we are looking at, so remember the long and then that nice controlled pullback, and then on the short, where it climbs back up. So we're specifically looking at the look. How do the candles look here? And how do the candles look here? Okay, so that's what I'm going to draw out for you because this is really important. So either up or down, it doesn't matter. We'll just draw up because it's easier to ascend while drawing. It's going to take a minute to draw out here, but it will be worth it because this is what it's going to look like almost exactly. I want you to notice how consistent these candles are. You see how consistent these are? They have very little wicks. Now, I'm not going to draw out all the little wicks, but you're just going to have little tits on these, if any. It is going to be extremely consistent on the way up. And then, so that would be for the short when it's coming back up into that VWAP. And then, you know, I will take a second, maybe through the magic of editing, we can kind of fix this. They have such a consistent look. It almost looks like a Heikin-Ashi candle. For those of you that don't know what that is, go look it up. It's very consistent. Yes, I'm not saying that these are without wick. There will be wicks, but they'll just be little tits. Now, you may still have the occasional candle that gets a little wild, right? But for the most part, it is very consistent. All even-bodied candles, very clean. The trend at which it's going down or going up is very consistent. This right here is the keynote to this video lesson on VWAP. Those setups on the daily chart, in combination with the 1 minute chart, in combination with these candles, the way it looks, if you wait for exactly what I'm showing you to watch and how to execute, that's the gold right there. I've made a lot of money over the years trading the VWAP exactly like this. The VWAP isn't to be traded each and every day. I know people will make it out to be that way. It is not. It's not something you want to do because you're just blindly buying the VWAP. It's stupid. It's not what you should be doing. We need to chase institutional money. That's where the smart retail trader does really well because they are actually following where the money is. So on lows at a dip on a day 2 continuation play, that's what you want to be looking for. You want to, if you miss the long into that initial support level, right? I would be hitting that support level. I'm just talking about trying to give a lesson on VWAP. I'm not waiting for the VWAP, but what I'm saying is I will use that VWAP for an ad because I'm already in it. But if you haven't entered on that, maybe you're still struggling trying to find consistency or trying to find a strategy where you should actually come get educated at Trick Trades, where I can actually show you how to do this, where you can get in before you have to look for all of this. But again, this is a video lesson about the VWAP and how exactly to trade it. So again, please make sure you are subscribed. Please, if you have any other comments or if you have a question about this, feel free to ask. Just be respectful in the comment section or you're going to get fucking ignored. And please make sure to like, share, subscribe. Come check out tricktrades.com if you want to learn how to be a consistent professional trader. We'll see you on the flip side, guys. Adios.